Thomas, we are joined by
Tony's
a man without meatballs.
That's right. We're due for some food.
We are due for some food. Mr. Dan Sheridan, how are you, sir?
Good. Good morning, Tony.
Good morning,
Tom.
sir.
Hey, Dan. What's going on?
Not too much.
I was down yesterday on the floor of the SIBO. I was telling these guys.
Tell him not to go to your territory. Tell him, you know what? You stay right here in your castle.
Territory. It's Tom's there. You kidding?
Yeah. Somebody.
It's like a morgue there, isn't it? I mean.
I was after hours.
Oh,
It
after.
was
Okay.
hours. But when I walked off the floor, we walked outside. We had a little cocktail party at this bar across the street. And when I walked outside, somebody looked at the horse there, and they looked at the horse and they looked at the Chicago Stock Exchange, which was the old Midwest Stock Exchange.
Yeah.
And they said, "Is that place still open?" And I didn't know the answer.
I think it is.
That's a good point.
It is? I think it is.
I think it is too, but I'm not. I assumed it was, but I didn't know the answer. I don't know if anybody actually. I don't know if they do any volume. If it's just a crossing exchange.
Right, that's what we used to do. I mean, most of the time we'd go there. Right, it was cheaper to cross stock.
Then the next question was,
let's explain to everybody what crossing stock is.
Oh yeah.
If you wanted to make a trade and I wanted to make a trade, and we wanted to put it up outside of New York at a designated price because it was set to a spread or another option or something like that, we would just cross those shares at the Midwest Stock Exchange or the Chicago Stock Exchange, which is called now, at a price that was in between the market so that nobody else was affected on it.
And it was cheaper for us.
Correct.
Yeah.
So and when I say it was cheaper for us, it was still more expensive than it is for retail customers today.
Today, yes.
Isn't that something? Yeah.
But somebody looked at you and said, "What's that horse doing outside?" And I couldn't answer the question.
It's the statue, right?
I know, but why is it a horse there?
It was where you would meet to settle out trades that couldn't be settled.
You said, see, that's right. I remember so many guys in the pit.
Why was
an
there a
argument
horse?
to the horse.
Why was there a horse there? None of us ever
I have
thought
no
about
stinking
that.
idea.
No.
Okay, neither did I.
So do you have the answer?
No, I was curious. I thought Dan knows everything.
Dan?
Dan knows anything.
Dan, the voice of reason?
It's a nice place to sit, or you'd see a couple fights once in a while by the horse.
True.
Yeah, I love it. I go back there now, and it's so funny because I was telling Tony, I walk around in there, and it's like, it kind of feels like nothing changes.
In a way, it does. You do right. When I go down once a week over there, and it is. You see the people who have survived are the brokers. I mean, that's who you see more of the old brokers and stuff.
So
yeah, 21 million shares traded there. It looks like on Tuesday. Yeah,
21 million shares of what?
Already today. I think
at the Midwest.
21 million
Chicago
shares.
Stock Exchange. Yeah.
Okay,
so
it
it's
trades.
alive.
That seems like a lot.
It's alive.
I don't think 21 million shares traded there today.
I don't know,
but that seems like a real lot. I don't think 21 million shares traded.
Maybe it's as of November 5th. Maybe
21 million shares traded
hourly.
If 21 million shares traded there today, I think that's more than the New York Stock Exchange. So I don't think that happened. At least I'm not sure what would be trading.
It's a matching system still. Same thing.
Okay, so ES up $5, NASDAQ's up $12, bonds are down 12 ticks, notes are down 8 ticks, and there is, I think, Dan, today is going to be, I shouldn't say a typical election day because we only have it once every 4 years.
Right.
But today is almost going to be like
a typical election year.
No, it's almost going to be like the day before a big number. But the weird thing was the last time we had a big number, the volatility came in 10%. So my question then is, to start off the discussion with you today, is have we gotten to the point now where we are trying to, rather than buying volatility going into a number, have we gotten to the point where people are anticipating nothing happening, which is what we said all along.
Yes.
And they're selling into the number. And the only reason I say that is because last time we legitimately had a sell-off of about 10% in implied volatility going into Friday's unemployment number.
Right.
Last Thursday.
Which is very similar. It's just an event. The whole question is, I think, coming into this, the only curveball that could be is if we're to the downside. Obviously, if we're neutral or up, they're going to hit the vol pretty heavily. But I think, I don't know how heavy, they're going to hit the vol some. But if we go down, just because we are at lower levels historically, it could come up a little bit. I think, like you, it's going to be I think the vols will come out
we were
some.
15 2 weeks ago. So,
yeah, we're going to need, on the downside, to get the vols really humping where the VIX goes over 20. You're going to need a 2% move or more, don't you think, in the market, or 1.5%?
I got to read you guys. Keep talking. I don't read you something.
I think you're going to need a good percent move to the down, some real. But what could cause, here's the thing, what could cause tomorrow a 2% move down? I don't know.
in volatility?
In the market.
in the market.
Which would take the VIX over 20, I think.
I don't know. Well, historically, Dow Jones, what is it? It's averaged something like, from what I read, about a 0.75% gain on presidential election days. So that's the historical.
But here's the thing. Could you, as a retail trader, you think, could you sell some premium? Okay, the vols will come out tomorrow. But to me, it's like selling before earnings. It's more of a spec type thing. Do you want to play that? A little bit, a small size, I think. But I mean, is it really worth it?
Let's talk politics for a second, because I'm sick of everybody emailing me saying, don't talk politics, Tom, because that just makes me want to talk politics even more. And I don't want to talk politics as far as what my beliefs are, what somebody else are, that kind of thing. I think politics with respect to just what you're talking about, opportunity. I don't care about politics with respect to how it moves the market. Let's be very clear about this.
Okay.
I don't want to talk my political position. I could care less. I don't want to talk about politics as a piece of news. I want to talk about politics as an opportunity. Okay.
Period.
Politics is an opportunity. So I've been reading all over. I saw, just reading what people are saying. And again, politics is an opportunity. I saw where Kramer said, hey, you know what? I thought he thinks Obama in a landslide. Okay. I've read other people that say, hey, it's an interesting and tight race.
Too close to call.
Most people inside this industry think that the markets are very predictive and it is Obama in a landslide. That's just what people think.
Sure.
But last night, somebody sent me a great research report, which I thought was really funny, and it was from a Deutsche Bank research analyst. Okay, Deutsche Bank, and it was from a chief equity strategist, and I think his name was David Bianco, or something like that. And what he said was the presidential race remains too close to call. Now, remember, as an analyst, what you're trying to do is you're trying to really throw something out there.
Right.
So either you say something that if you want to be politically correct, or if you want to be neutral, fine, be neutral. Say, hey, we're neutral. We don't make political calls. But But to go out and say it's too close to call, and with stock pricing an equal chance of equities going either direction.
Okay.
So basically, you're saying absolutely.
So far, he said nothing.
You said absolutely nothing. The next line is
translation.
The next line is essentially our S&P target for year end is 1475. Okay. This is what the sounds like. Our S&P target for year end is 1475. Now we have felt that.
So it's about a little bit higher. There's 1420.
Yeah,
50,
we think
50.
We think the path of least resistance is higher as well. But he's saying our target for year end is 1475. Now, I'm fine with saying that, but put context around it. Tony, what are the chances? If I was writing this, if I was this person's boss, I'd say, listen, if you think it's, and this is your chief equity strategist, you want to say it's 1475 for year end, that's fine. All you have to do is go to the quarterly options in the S&Ps, in the SPY. Yeah, put it up.
Gotcha. Right. Yeah, I'm getting to it.
Quarterly options in the S&Ps, because this needs to have context.
Right.
And I'm not just picking on this guy because he didn't put any context.
So you go to these quarters, which end on the last day.
Last day of the year. What is the statistical chance of getting to 1475? That's where they think they're going to close. What's the statistical chance of closing at 1475?
I get you.
So you just go up to 147.5. That's where it is, right?
Yep.
And it's wrapped around 20%. That's what it is.
Yep.
So there's a 20% chance it gets there. Right. So the first thing you need to say is, hey, we think it's going to 1475. There's a 20% chance of that happening. That's context. Then you have at least the beginning of something that's, if not,
if you can make an argument, because
even if it has no value, at least there's context around it. Okay. This is what drives me crazy about the whole business. But then he goes on to say, 1450 if Obama wins.
Okay.
And 1500 if Romney wins.
Okay.
Okay. Now just think about how moronic that is. Okay. You have a 20% chance of going to 1475.
Right.
But if Obama wins, okay, here.
There you go.
Here, this is what I love about this. But put some real context around this. The chance of going to 1450 are 32% if Obama wins.
1450, no, 14.
That's what he said.
1450. Gotcha.
32%. The chances of going to he's at 1500 if Romney wins.
That's
11%. Now, don't think he's the first person to recognize that there is an election today.
I agree.
Okay.
Right.
So my point is, you're essentially saying, without putting context around it, those are the dumbest comments ever.
Right.
Okay. Because it's not like the market doesn't recognize this stuff.
Now, if he would have said something like, you know what, volatility in the market's quite low today, and the market's basically telling us it doesn't matter who wins because the volatility is so low that typically we go higher, and I like 1475. I mean, does that make more sense to you?
No, here's the thing. So this guy thinks no matter what happens, the market's going up.
Period.
Okay.
Right.
But then if you think no matter what happens, he's basically saying no matter what happens over the next 2 months, the market's going up. Right? Because either going to 1450 if Obama wins, and 1500 if Romney wins, and 1475 if it's a tie. Okay.
Yeah. Okay.
So then, why do you say you have no opinion on the markets? Because you do have an opinion on the markets.
Right.
Oh, at the beginning, that's right. He said he didn't have an opinion.
Well,
on
he said it's 50-50 whether they go up or down, but every scenario that he's made so far is only to the upside.
I got you.
Right. So here's some brilliant, or supposedly brilliant Wharton grad. I'm just assuming it's from Wharton. If it's not from Wharton, it's Harvard. It's one of those two places. Okay, because in order to get a job with Deutsche Bank, you have to be from Wharton or Harvard or maybe Yale, whatever it is.
Okay.
You know, maybe every once in a while they take a University of Chicago, MBA. And so you figure, okay, with at least, I don't know,
no DePaul kids?
No DePaul kids. No, you get University of Chicago. You don't even get a Northwestern kid because you may get University of Chicago.
Okay.
So, or maybe Stanford. And in the end, you're saying it's too close to call. So you don't know whether the market's going up or down, but you're saying under every scenario the market goes up.
Goes up, right.
Now, if they just said to this guy, hey, put context around it, this is the joke. So in return for this brilliant piece of information, you're supposed to give your money to Deutsche Bank to manage.
That's correct.
And I'm looking at this, I'm like, oh my God. Okay, I may say some things on this show where I put my foot in my mouth like 40 or 50 times a day. Same thing with you and all this stuff. But Dan,
I'm a little more than 40 or 50 times.
But the craziness of it is, but these guys actually send out this stuff which says, if you wanted to say that the election is too close to call, and if this person wins, we go down. If this person wins, we go up. Or if this happens, we go down. But in all three scenarios, we're going up here, and he's saying he doesn't know. I just don't get it.
That sounds a little,
It's insane.
Insane.
But people read this and they wonder why analyst reports are so worthless. They wonder why listen, there's only one person that cares about Dan Sheridan's money.
Oh, that's right.
That's right. Who cares about you?
My wife
and
myself.
That's it.
Yeah.
I mean, and your kids care because they're worried
kids
about
care as long as they're under the house because they want to make sure the next meal.
Which is now 34 years old.
Yeah.
They don't think they're 34 years old.
But I'm saying Dan Sheridan cares about Dan Sheridan. And Dan Sheridan should be the one that cares the most about how Dan Sheridan performs. And here's another thing I want to bring up, because a lot of people, we've had this discussion before, Dan, but I want to get your take on it because I've been making a big case about this. We always talk about this business as a function of managing risk. Okay? Everything's about managing risk. Right, Tony? You're managing risk, right? Dan, managing risk. Everybody's managing risk. The whole business is about managing risk. You know what? You want to get in the investment business, you got to learn damn well to manage risk, right?
Correct.
Right.
Bullshit. Total
He set us up.
bullshit.
He set us up.
No, you knew it was coming.
It's total bullshit. You care about Dan Sheridan? What business?
I care about other people, but I mean, as
I'm
students.
saying when it comes to your money.
Yes.
When it comes to Dan Sheridan's money, Dan Sheridan is responsible. You manage your own money. You're responsible for your own money.
Right.
Okay. Nobody else to blame.
Right.
If you were to in Dan Sheridan Inc., you're the CEO of Dan Sheridan Inc. You are looking for opportunity.
Absolutely.
In every single business, every visionary, every smart person that we have on the show, we're looking for opportunity. We are trying to create ideas, to be creative, imaginative. We try to build opportunity, take advantage of opportunity, right?
Right.
That's what traders do. Nobody ever is successful in the business world that manages risk. It's called fear of success. Mm-hmm. And if you are scared of success, you are a total failure. All right? That's all it is.
Agreed.
People
you manage risk on entry anyway.
You have to embrace opportunity, and you never can be focused on managing risk. You will not be successful. And the reason for that is just think about any other business. There's no business that you could take, that you would get into, Dan, where your focus as a visionary, as the CEO, would be to manage risk. They would fire you in 2 seconds.
We can't expand because we have to worry about the risk. We can't do inventory because we have to worry about the risk.
How many great football coaches or great coaches of any sport, all they do is they're worried about, you know what? We're going to go into a prevent defense on the first play. Yeah, right. But that's what people do when it comes to managing their money. They're like, on the first play, we're in prevent. Where's our stuff?
We're not giving up the touchdown.
What's the first thing most people teach? Dan, what's the first thing most people teach when they do investor education? That's like, if you're going to buy the stock, you're going to put your stop in here.
Right.
Okay. It's immediately put your stop in here, defend yourself here, sell this here, whatever it is. It's crazy. We do this business half-ass backwards.
Well, you're right. Opportunity has to be leading the horse. right? And why are you making the trade and where is the opportunity?
Yeah.
Once you get the trade on, then the next part is maybe what are you going to do or what's your plan? But you constantly have to be on that alert for that opportunity, like we're talking today with the premiums, or what do you think the opportunities? Is that what you're saying?
Yeah.
More like, yeah.
Steve Jobs did not get to be Steve Jobs because Steve Jobs defensed bad ideas that didn't work. Steve Jobs embraced every single bit of everything that came into his head opportunistically and took it. Eventually, something worked. Okay, it took him 17 years, but eventually something worked. But his brain,
he was able to articulate his vision for the rest of the company.
Of course, but that goes without saying. That's what I believe there's going to be hundreds of thousands of successful investors because they are going to embrace daily opportunities, which has never been delivered before to individual investors because it's always about managing fear.
Yeah, fear of the long haul. Don't worry about it.
Just look at what this analyst wrote. Look how dumb it is.
Well,
look
fear,
how
but
classic.
confusion. I mean, they're not confusion. You get these. I remember we used to get these when we were in the pit. We never read them. We'd have a guy up in the office saying, okay, here's what this company said about your stock. And, we'd be like, what is he saying? What's the bottom line? It could go up or it could go down, or you give some number.
That's what Tom's trying to say in that article.
Yeah.
There's a 50% chance that we go up or down, but all the picks I'm going to make are wrapped around 75% that we go higher.
Listen,
I mean, you can't. I mean, it's what do you say? 60% of the time, I'm 100% right. I mean,
your chief equity strategist,
and he's getting paid for this.
Your chief equity strategist is saying if Obama wins, we're going to 1450, and if Romney wins, we're going to 1500 in the S&P.
And all likelihood is we'll be somewhere in the middle.
We'll be in the middle, but I don't really want to make a call. We're currently trading at 1400. I don't want to make a call.
Yeah.
I mean,
but don't hold me on this.
Yeah, but it doesn't really mean anything because I'm just an analyst. I can't trade.
Right.
So now on top of all that, and then I can't trade anyway. Are you kidding me? But that's what the business has been like for 50 years.
Right.
So the guys that come along, the Carl Icahns, okay, whatever you want to say, they come along and they buy these shares of Netflix into the whole of the Warren Buffetts, whatever it is, and then people look at them. This guy's a genius. This old Raider is a genius. Okay, they're obvious plays. They're not scared to put their money where their mouth is. That's the difference.
That's right. That's right.
Hey, the horse was is at the CBOE because it's strength and motion. That's what the.
Oh, you found that?
Yeah.
Who said that?
Are you serious?
Yeah,
Strength and motion.
DeLuigi was the gentleman's name.
Italian guy.
Yeah, and it was inspired by the four horses of St. Mark's Basilica on the plaza in the Piazza San Marco in Venice. He conveyed a sense of motion by capturing the horse in mid-stride.
I knew that.
You want to make sure the horse's lines were well defined.
Vanetta knew that.
Strength, masculine, implying great power, fertility.
I think he added the fertility part, Tom. I don't know if he did.
I'm going to tell you. I'll tell you an interesting story. Goodness. I'll tell you an interesting story. This is how
Actually,
I know.
Al helped me on that.
This is how I know. This is how I knew that options.
Tom, that Tony was the right
no,
one.
That Tony was the right
Tony
one.
was the one I wanted to spend 12 hours a day with, locked in a room all by myself. Give it to me, Tom.
There is a woman sculptor who has this big sculpture when you walk into the front of the SIBO.
Okay.
It's on the giant wall.
It's a woman sculptor. The sculptor was a woman.
The
yes,
sculptor
who
was
has,
a woman.
Yeah.
On the whole front of the SIBO when you walk in.
Yes.
It's an entire wall. It's a gigantic sculpture. You probably haven't seen it. It's like the city of Chicago.
You walked by it every day that you.
Every single day.
Yes. That you went through the turnstiles. Every day you went through the turnstiles.
The man is not observant. Okay.
He
was focused, Tom. He was just focused.
He's telling me something that's probably as big as a building.
Yes. It's the whole wall.
It's the whole wall when you first walk in.
That's scary.
Okay, you don't know what it is, do you?
No.
Next time you go and you can check it out. So I looked at this thing for years. I stared at the sculpture, trying to figure out. I couldn't really figure out what it was. Okay. Fast forward 20 years. It's her studio that I bought and I'm moving into.
No.
Yeah.
Yeah. Yeah.
It's her, the lady who did this.
I had no idea, but I had no idea.
That's kind of neat.
I stared at this thing for like every
So what
morning.
did Tom do to this woman's iconic studio? He basically tore it down and kept one wall up.
He gutted it.
I had no idea.
All the floors.
I had no idea. Saw this thing for 20 years. Had no clue whatsoever. And then ultimately, I walked this woman's house one day. I mean, she died.
Yeah.
And I looked around at all the sculptures and stuff, and I'm looking around. I'm like, where do I recognize this artwork from?
Oh, they
And-
had something
you
like
see,
that?
Tom
Or?
actually was able to look at that sculpture a lot because back in the 80s and the 90s, he would actually sleep on the floor there to make sure that he would get his spot in the pit.
Wow.
And he would just stare up at that sculpture and say, you know, one
I
day
didn't even-
I'm going to own a sculpture just like that.
Wow.
We're going to take a very short
He
break.
is out of control. But
We're going
it's
to take a
good.
short break. We're going to come on back in about 60 seconds.
Oh, too funny.